Hi everyone, welcome back to the AI Academy. In our last lecture, we covered various Excel functions. Today, we will be delving deeper into more Excel functions. Our focus for today's lecture is on break-even analysis. We will explore its components, calculations, uses, and limitations, along with examples. Finally, we will wrap up with spreadsheet modeling and engineering. Let us start today's lecture with break-even analysis. It is a financial calculation that helps determine the point at which a business will be able to cover all its expenses and begin to make a profit. This is known as the break-even point. Understanding the break-even point is crucial for decision-making in various aspects of business operations such as pricing, budgeting, and financial planning. Now, let's discuss on its components. First, we will start with fixed costs, which are costs that do not change with the level of production or sales. Examples include rent, salaries, insurance, and other overhead costs. Next is variable costs, which vary directly with the level of production or sales volume. Examples include raw materials, direct labor, and commissions. Total costs is the sum of fixed and variable costs. It changes with the production volume because variable costs change while fixed costs remain constant. Revenue, which is income from sales of goods or services, calculated as the selling price per unit multiplied by the number of units sold. Contribution margin is the difference between the selling price per unit and the variable cost per unit. It represents the portion of sales revenue that is not consumed by variable costs and contributes to the coverage of fixed costs. Next topic is break-even point calculation. The break-even point can be calculated in units or in sales dollars. While talking about units, break-even point is equal to fixed costs divided by the difference between the sales price per unit and the variable cost per unit. In sales dollars, break-even point is equal to fixed costs divided by 1 minus the ratio of the variable costs to the sales. Let's take example to understand. Let's assume a company has the following costs and pricing. Fixed costs, $50,000. Selling price per unit, $100. Variable cost per unit, $60. The break-even point is calculated using the above formula. In the above we have substitute all the value in the formulas as you can see. So, break-even point in units we get 1,250 units, whereas in case of dollars we got $1,25,000. After an example, let's discuss the uses of break-even analysis. We will start with pricing decisions, which is used to help us to determine the minimum price at which a product can be sold to avoid losses. Next is cost control that identifies fixed and variable costs, assisting in cost management strategies. Then comes profit planning, which is used to assist in setting sales targets and understanding the impact of changes in costs and prices on profitability. Investment analysis that evaluates the feasibility of new projects by analyzing how long it will take to reach profitability. Budgeting, which help us in preparing budgets by understanding the relationship between cost, volume, and profit. While talking about limitations of break-even analysis, assumption of constant prices and costs is one of it. Assuming selling prices and costs remain constant, which may not reflect real-world situations. Next is single product focus, which means it will be more complex for companies with multiple products or services. Ignores changes in inventory levels is also one of its limitations. It does not account for inventory fluctuations, which can affect cost calculations. Then comes simplistic assumptions, which means assuming linearity in cost and revenue, ignoring potential economies of scale or other non-linear factors. Let's take an example of break-even analysis. It is a valuable tool for understanding the financial dynamics of a business and making informed decisions. However, it should be used alongside other financial analysis tools for comprehensive planning and strategy development. Let's see a break-even analysis example for a clothing company. Now I am going to show you how to calculate it. Assume, here fixed cost is 20,000, variable cost is 12 and price taken is 25. To calculate break-even analysis, which is represented by V. It is calculated using Excel formula. In this cell, C4 is divided by C6 minus C5, that is fixed cost divided by the difference of price cost and variable cost. After calculation, the value of V is 1538.462, which is a break-even point. Now let's discuss on spreadsheet modeling and engineering. They are powerful tools used for decision-making, analysis, and problem-solving in various fields including business, engineering, finance, and operations. This approach leverages the capabilities of spreadsheet software, like Microsoft Excel or Google Sheets, to create models that represent real-world systems and scenarios. Let's discuss about spreadsheet modeling first. It involves creating representations of real-world processes or systems using spreadsheet software. These models use cells in a spreadsheet to hold data, calculations, and logical relationships that mimic the behavior of the system being modeled. Its key components are data input like raw data, which is the basic information entered into cells, which can be numbers, dates, or text. Assumptions like hypothetical values or conditions that affect the model, such as interest rates, growth rates, or cost estimates. Formulas and functions, which includes formulas like mathematical expressions that perform calculations using the data input. Functions which predefines operations in spreadsheet software, like sum, average, VLOOKUP, and if, that simplify complex calculations. Next comes logical relationships, which includes dependencies which guide us about how changes in one part of the model affect other parts, often established using cell references, and constraints which show us its limitations or conditions applied to the model to ensure it accurately reflects the real-world scenario. Output results which show the outcomes generated by the model, which can be used for analysis and decision-making. Visualization like charts, graphs, and tables that represent the data and results visually, making it easier to interpret and communicate findings. Applications includes financial modeling that creates budget forecasts, cash flow analysis, investment appraisals. Operations management, which is the inventory management, production scheduling, resource allocation. Project management, which includes Gantt charts, resource planning, cost estimation. Marketing analysis like sales forecasting, market segmentation, pricing strategy analysis. While talking about spreadsheet engineering, let's start with the definition first. It involves applying principles of engineering and best practices to the design, construction, testing, and maintenance of spreadsheet models to ensure they are robust, accurate, and reliable. Key practices are design principles, which includes modularity, which breaks the model into distinct sections or modules, each responsible for a specific aspect of the system. Next is transparency, that makes the model easy to understand by using clear labeling, logical organization, and documentation. Scalability, which includes designing the model so it can easily be expanded or modified as new data becomes available or as requirements change. Construction best practices. Consistent formatting that uses consistent cell formats, color codes, and naming conventions to improve readability. Error checking that implements checks and balances within the spreadsheet to identify and correct errors. Use of templates means creating reusable templates for common modeling tasks to save time and ensure consistency. Testing and validation. Unit testing, which includes testing individual components of the model to ensure they work correctly. Integrated testing that ensures that all parts of the model work together seamlessly. Sensitivity analysis, which includes testing how changes in input variables affect the model's outputs to understand the model's robustness. Maintenance. Regular updates that keeps the model up to date with the latest data and assumptions. Documentation that maintains detailed documentation of the model's structure, logic, and any changes made over time. Version control, which uses version control techniques to manage changes and updates to the model, ensuring that previous versions can be retrieved if needed. Next is applications. Risk management that assesses and mitigate risks in financial portfolios or project plans. Quality assurance, which ensures that business processes and systems operate as intended. Strategic planning that supports long-term planning and scenario analysis in business or engineering projects. While talking about spreadsheet quality. Checking a spreadsheet for mistakes verification means making sure a spreadsheet model is correct and does not have any logical mistakes. Here are 3 ways to improve the quality of a spreadsheet. Make the design and layout of the spreadsheet better and cleaner. Improve the step-by-step process to build the spreadsheet. Carefully review the results. Let us conclude today's lecture by taking an example of simple spreadsheet model for computing net income. Here we will calculate net income of a company where we are taking sales as 60,000, cost of goods sold is 3,500, and selling expenses 2,000 and tax is 1,000. To calculate net income, the formula is equal to C5 minus sum of C6 to C8, that is sum of all expenses is subtracted from the total sales. Let's see how it is calculated. After calculation, the value is 50,500, which is the net income. In summary, this lecture covered the following topics such as break-even analysis, its components, how to calculate it, its limitations along with its example. Finally, we'll conclude with spreadsheet modeling and engineering. In our next video, we will see in detail about the following topic: graphical visualization, knowing various charts and graphs. Stay tuned for the next lecture, where we will continue our journey through business analytics for management decision courses. If you want any other topic to cover, please let us know. If you have any queries related to this lecture, you can ask in the comment box. We will try to clear all your doubts. We hope that you have found this course informative. Please hit the like button and subscribe to our channel for more information on business analytics for management decision content. Your support is really important to us and it encourages us to make more educational stuff for you. Thank you for watching and see you again.